Good afternoon, everyone. It's Dr. K coming at you from London as usual, and Gil from Playa del Rey. And, well, let's just get right to it. The markets continue their baby-stepping action in this QE-motivated market. The slope of the NASDAQ has improved, the slope of ascent, simply because some bellwethers like Microsoft and Apple have started to come straight up off their lows, and being that these components carry measurable weight in these indexes, the NASDAQ 100, the NASDAQ Composite, it's helping the index catch up to the likes of the S&P 500. S&P has actually also increased its rate of ascent as financials are one of the stronger industry groups out there and comprise a certain percentage of the S&P 500. So at any rate, we're seeing the quantitative easing 3 come into play in greater ways than it was earlier this year. It's reminiscent, QE3 now is more reminiscent of QE1 and QE2 in terms of the progress that the major averages are making. And it'll be a matter of whether this QE3, with all the central banks printing en masse, including Bank of Japan, whether this will result in an acceleration of price moves in the majors. So we'll just wait and see. In the meantime, the market direction model sits on its buy signal, which is proving profitable. And the UVXY, rather than just call it the VIX volatility model, although that's a bit of a misnomer because it's really focused, it's connected more toward ETFs such as VXX, UVXY, XIV, and not so much the VIX, because there's really less correlation with the VIX in terms of what the model is looking at. But it's also looking at, in tandem with the market direction model, such that sometimes when the market direction model issues a buy or sell signal, the VIX volatility model will issue the opposite signal. Since, as we all know, when volatility increases, that's a signal that the market's falling. So when the VIX volatility model goes on a buy signal, that usually means the market's in trouble. And as far as leading names, they're starting to look like there's signs of life there. We've had a number of viable gap ups. I would say not viable gap ups, but stocks gapping up on good earnings, and that's obviously a bullish sign. Some of these stocks have been actionable, and we've sent members reports on such. Biotechs continue to be quite strong, with industry group ranks typically in the top 10. We've reported on a number of these names like REGN, which continues to move higher, ALKS, VRX, SNTS, and so forth. And precious metals in no man's land. They're going to be tracing out a basing pattern probably for quite some time. But given that QE is in effect, it's just a matter of where the price of precious metals starts to lock into all that money printing, and where the demand for paper is so low, but the demand for the physical metal is so high. We're seeing a price premium on silver and gold in terms of acquiring the physical metal. So at some point there's going to be an equilibration going on, and I think we're going to ultimately see the price of these precious metals move higher. And given all the fundamentals that are in play right now, we will probably see these metals trace out and complete these long basing patterns. And maybe it's going to be this year, maybe not. Maybe it'll be sometime in 2014. But what's nice about gold is that when you see the base complete, it's clockwork. You get a big volume spike on the breakout, and that's your buy point. And it's done this every single time since 2001. So it's just a matter of having the patience to sit through this long basing pattern and not jumping the gun too prematurely, especially when gold is currently where it's at. Gil?
Yes, good morning, everybody. It is morning here in Playa del Rey, California. So, but we're all basically on market time, I would have to say, regardless of where we are, right, Dr. K? Yeah, the paradox of the metals continues as I see it, but it doesn't mean, just because we see strong physical demand, doesn't mean it's going to hold up the price prices of the metals necessarily. I think you could have the paradox of paper prices continuing to drop while we see physical demand be strong all the way down. So there's a weird paradox there. Someone has posed the possibility that you could see physical or paper prices collapse, drag the price of the metals down, and this would then result in a low, and then you'd see the metals prices take off. So I think that's kind of what we're seeing as a longer range scenario. But the bottom line is you don't really need to worry about these as long as there are no actionable buy points. And I think that's really the critical point here right now as far as the metals go for those of you who asked about them. I think if we look at gold, for example, the move back up has been pretty sharp, retraced about half of this gap down. And you have a gap down today. You know, it might be a little bit of exhaustion there as well. So that might create a little low in here, but we'll just see how this pans out. You could have a sort of a white coffee and retest, as I like to say, as you come in, and maybe the volume's a little lighter, and maybe that sets up some choppy movement back up. But we'll just have to see what goes on there over time. But it's basically a wait and see sort of situation with the precious metals. But I think for the most part, that is the longer term trend might reassert itself. Anyways, I'm sure everybody's having a lot of fun with Tesla on the Bible gap up. Interestingly, on this one, let's see. I want to pull up one of my old charts here that I have saved. Let's see if I can find it. Where are we? And let me pull this up. You look at the gap up here. This is red only because this bar is red only because the stock gapped up higher and closed just a little bit lower. Intraday, you went a lot higher into the close, towards the close rather, and started jetting up to the 75 level. But you basically closed mid-range, and you had this long uptrend. You had a gap here that failed roughly. You might have given it some porosity, but I think. Let's see if the low here is 41.70 and you drop down to as low as 40.50 or 40.33. Yeah, you're within range of porosity for a name like this. But basically, you had the gap up and the move up. For those of you who've been in the chat room, we were talking about it right in here. I thought it was probably Bible. We were joking at that time. And let's just go. That's April 15th about subsidy stocks. So Solar City was another one at that time, and you can see that was here, right around the 1920 level, and that thing has launched higher. First Solar was another one, and from the 15th, that has launched higher as well. Notice even after earnings, you had a sell-up, and it has moved higher. Tesla was the other one. I think, though, a lot of people, you're skeptical of this because you have an uptrend, but it reminds me a little bit of Apple in 2004, and I was talking about this on the chat room. If you look at this, you had a breakout here. Let's see if I can actually show the whole chart. You had a breakout here in late August from this sort of cup and handle, I think it was, or maybe it was down here. Whatever it was, you had a breakout in this area. Let me make this fit, actually. There we go. And you moved higher, and it was just slow trucking along. And I remember during this phase, I was buying and selling the stock back and forth, and it wasn't until we had a gap up on this day that I went whole hog. And the thing took off. So you could look at Tesla maybe as being a little further developed, maybe in this situation where you saw another gap up in Apple and it closed mid-range, similar to what Tesla did yesterday. And then it continued higher and had a pretty nice move, another 10-15% higher from there. So you're seeing that today in Tesla, where you're running up another roughly, I guess, 10%. You could have bought it this morning if you'd sold. I was playing this yesterday and sold into the gap, and then it's a buyback under 70 this morning, and it's pretty continuous and boom to the upside. I think, though, you might be getting a little bit long in the tooth. A lot of this is probably shorts getting their heads ripped off, and I believe there's about 31 million shares short in the stock on a float of what I think is 80 million. Correct me if I'm wrong there. But, that's almost half the float, and these people are getting stomped. But that data is as of April 15th, and I got to think that some of them covered. But I still think you have a critical mass in here of bozos who've been shorting the stock, maybe into the uptrend too, and maybe you get more shorting into this gap up, which could set up for their upside. I think at this point, obviously, this name gets a lot of attention right now, and everybody wants to own it. in hindsight, but you kind of had to be there, and I'm going to say it. You had to be in the chat room around here to really get on board. I know a few of you did, and you made a lot of money. I didn't, but I did play. I did sort of jump on into the gap up yesterday as we pulled down into that 65 area on the pullback, and we were talking about how that could be done in the chat room. And I do want to point out we've had at least one question, someone asking, can we capture my comments or Dr. K's comments in the chat room and have those available for members? And my quick answer to that is get real. The chat room, in my view, is not a voyeuristic experience. If you want to find out what's going on in the chat room, then you better log into the chat room. And I show up there. I pretty much hang out most of the day. I don't necessarily talk all the time, but I hang out. I want to see what's going on. I also want to get a sense of the community that is forming there, and there is a community that's forming there. And if you want to benefit from the discussion in the community, then you'd better damn well get involved with the community. It's not a voyeuristic experience. It's not intended to create content that we're going to, quote, capture and then allow for redistribution. As far as I'm concerned, it even violates the privacy of people who are in the lounge, as I like to call it, the lounge lizards. And there's just banter and people going back and forth and trading ideas, and I think it's disrespectful of those who are participating to capture everybody's comments and give them to those who aren't participating. So you want to benefit from the chat room, get on board and check it out. I mean, it's a great conversation going on all the time. I think it's a great community developing, and we're finding out just how much people know and what they're able to contribute to the overall conversation. So Tesla's been I would say, a product of the idea is a product of the conversations going on in the chat room. So anyways, getting on to some other names. Now that I've gone off on my little diatribe. Yesterday we were talking about SPGI being real tight in here, right along the 10-day moving average. And then it's moved higher and jacked a little higher today. It's coming in. I think you could consider this a pocket pivot, since I believe this day was due to a secondary being priced and distributed. So, Dr. K, you getting in a little shootout there? I heard that. But anyways, I was
so many different sounds, so don't even, it's just a normal thing.
Okay.
Most of them are shut off, actually.
I just don't want to get alarmed when I hear those bullets zinging around your flat there.
Back to the days of East LA.
Exactly. Back to my home. Anyways, but you could consider this as not a down day. It just this volume is sort of an anomaly. So this could be considered a pocket pivot. You're trading around 28.03 right now, and it looks pretty good. I like this pattern. The pattern, you could call it, I guess it's a high tide flag. I'm going to say it's just a little flag formation, but you're better off just operating on the basis of observing the tide action in the daily chart, and then you have the pocket pivot breakout to the upside. So another name that has garnered a great deal of interest lately has been 3D Systems, which is trying to form a cup with a handle. And I pondered whether this might be forming either a new cup with a handle that's going to break out again and go higher. I think that's definitely a possibility. In the chat room the other day, we were also discussing the fact that this is about a 41.6% deep cup. So it's pretty deep when you look at it on a weekly chart, but it doesn't mean that it can't set up again and go. So, it brings to mind the famous pod formation, the punch bowl of death, which we talk about, I believe, in Chapter 6 of our first book, Trade Like an O'Neill Disciple. And to understand what the pod formation is, I think this is still open, and I think it could just as easily go higher. And based on the pocket pivot the other day, they were added to the S&P mid cap index, I believe. Then that accounted for this big volume, but it still is pocket pivot action coming on the heels of this day here. And today, if this thing can close in the black, the volume is definitely high enough. Given that this was an up day here 3 days ago, the volume is definitely high enough for another pocket pivot right up the 10-day line. And this morning we put out our pre-market pulse, and we did alert you guys. Hopefully you guys read that in the morning. I know a lot of times it's pretty mundane because it's basically the same old story every day. The market's going higher, and the market doesn't care whether it's heavier volume or lighter volume or whatever. It just continues to truck on higher. And so, the commentary gets a bit mundane in that regard. But every once in a while, there's something that's notable. And this morning, I was pointing out, or Dr. K and I were pointing out that you were pulling, after they priced this thing at $40, you were pulling right into the 10-day moving average, which this morning was at 39.81. You notice that it has moved higher today, and it's now sitting at 40.57. So it's meeting up with the 10-day here and trying to set up in a pocket pivot. It looks pretty good. So let's see. I'm going to go through some of the names that I find kind of interesting. I think Coors is real interesting, rounding out the base. And we've talked about this sort of stuff, that it seems like you're getting a lot of these names rounding out bases and coming around the upside. If you look at this, right here, you get a nice move up. You're already above the 50-day line. That's the blue line here. That's pocket pivot volume signature, but you're nowhere. There are no moving averages where it's moving up off the moving average. Like this would have been a nice day for a pocket pivot, but it closed down on the day, so it doesn't really count. But the next day you do pick up, and you're sort of breaking out of this little range here. But interestingly, here comes the stop. It's rounding out a base, and here it comes. And so maybe now it's going to set up. And we've seen a number of stocks do this. So I think it's something you definitely have to be alert to. And it may be one way that you think outside of the box in this environment, where things that break out don't necessarily always end up generating a lot of upside momentum right away. I think some of the Bible gap-ups have worked very well, and some haven't. And I think there's a difference in the way that works. If you look at, say, Illumina, this thing gaps up, holds tight for 3 days, and moves up and out of there. If you look at Lumber Liquidators, this thing just keeps going higher, a little pullback into the top of the Bible gap-up days range, and then you continue higher as well. This is what a Bible gap-up should look like in general. We have Santaris coming out and doing a secondary, but notice what you're getting today. Dr. K, would you call this a pocket pivot type move here on this pullback? You're about, the Bible gap up has basically failed, because I think even if you're allowing for velocity,
that's a legitimate pocket pivot. I mean, it's it's why sometimes you have to be really quick on the trigger. You would have sold, and then you got to buy back, and sometimes it's tough psychologically to do that. But that is sometimes the best trades sometimes come from those difficult moments.
Right, but I have no problem doing that myself, and those of you who've been on the chat room know I talk about this all the time. I might buy something and then sell it, and then buy it and then sell it, and buy it and sell, and then finally I catch the ride, and at the right point in time. And I think that as an investor, particularly using our style of investing, you need to be oriented that way. And I think the beauty of the markets, and I've said this many times before, is that there's a lot of liquidity. You can buy and sell things on the same day and do it several times. This isn't, you're not selling an art piece. You're not selling real estate, which takes many days to deal with, and an art piece has to be sold at an auction. And when do they have auctions going? Very rarely. So liquidity in certain asset classes is definitely lacking, but in the stock market, it is a beautiful thing, and you need to use it to your advantage, And I think most people get this idea that they want to marry stocks, and they're in a long-term relationship with them. And I guess if you operate slowly and that's how you want to do things, and that's fine as well. But with my style, I'm flexible, and if I had sold out of this one, I think today's action indicates that you're getting a pocket pivot, and that's probably actionable. So, keep your mind open.
Also,
and be open
keep
to opportunities.
Just wanted to say it's not a pocket pivot yet, because it really needs to close
up on the day, right?
Up on the day. I mean, where it's at right now, we're still down 1%, so it's not a pocket pivot yet. Just wanted to make that clear to everyone. And since it's got a long tail, it doesn't have to close break even. I mean, if it were to close down like 0.1%, that would still be qualified as a pocket pivot. So you have to take market context. The chart
right now you're running, Dr. K, you're 11 cents above yesterday's close, which yesterday's close was 2020, and right now you're at 2032. So right now you're holding on, and we'll just have to.
My Wanda is being delayed again. Let me just. Yeah, there we go. Okay, now we're good. We're good now.
But you can see on my chart on eSignal, which is real time, that is happening.
If it doesn't stay positive on the day, though, then it doesn't. It's not a valid pocket pivot. Some conservative investors might want to wait toward closer to the close to ensure that this is going to be a legitimate pocket pivot.
Yeah. Now, Netflix was sort of a flake out as a pocket pivot, and it dropped. It actually dropped enough, I think, to push you out of the stock, but you can come right back in. This is another example of how the Bible gap up fails, but the pocket pivot puts the stock back in play. Now, my guess is you might need to run sideways a little bit in here, but I think this, reasserts the stock strength, and as long as as long as it can hold above the 10-day moving average, for those of you who would play it very tight, I think it's still viable here and viable, so that works. But this is not the kind of viable gap up that results in huge upside. Certainly not like the first one, because you could have came in and bought this one, and you would have been up pretty nicely the second day, and a decent ride up here. But it's not like you got a massive move, but decent enough. And the thing went sideways, violated the 50-day moving average, and then gapped up again. Maybe that gets a little bit too obvious. So. Facebook is testing its 50-day moving average. It's dropping below it right now, and it's looking kind of weak. I've watched this one as the stock possibly rounding out its base. I'd watch for a 50-day violation, and that might put an end to that one. But it's pretty much acting weak. It retraced half of this move, which looked okay, but notice on the bounce over the last couple of days, you haven't seen any real volume. That might turn around, so just keep an eye on it here. Let's see. Somebody's asking if you should use a 6-day rule on a big move. Well, Lulu is not a viable gap up, so how can you apply a viable gap up rule to a stock that has not had a viable gap up? That would be my answer to that one. Somebody's saying, if Dr. K was in the chat room, could he have made a lot of money too? Get in there. Yeah, Dr. K. We've been dissing you in the chat room frequently, just so you know, in case your ears have been burning.
Well, not really, because there's about 8 other chat rooms that are always ongoing with the the e-marketing engine. So and I try not to get involved in those because they'll suck your time away. I mean,
Right.
Facebook, YouTube, all.
But wait a minute. These are our subscribers in our chat room. This isn't some random chat room. So
they're not random because the number of subscribers that are now in that chat room actually started on Facebook or YouTube.
So what other chat rooms are you available on? So if people want to chat with
a number of Facebooks, but I really discourage people from. I hate that sound effect when someone's trying to get me on chat, whether it's usually it's a Facebook thing. Because again, it just disrupts my day, and if I get 20 people doing that, it's going to really create problems. So I often turn off my chat for certain people. You can actually turn your chat off, but I don't want to just block someone.
This later.
So it's a matter of time management, which I don't have. So that's the bottom line. We got to focus on what we do good, and that is stock selection and market timing, and especially these arduous times.
You guys, I've been in there. As tough as they get. I've been in there, and there have been some great ideas in there, and hopefully, it's been worthwhile for you. And I think so, and I also think there are some other people in there who are pretty sharp, and the input there is pretty good. Anyways.
Yeah, no, we definitely. I think our subscriber base is definitely. Not to be biased here, but probably one of the sharpest. And I've noticed that the ones from YouTube and Facebook that actually become members, those tend to be the ones that are more intelligent in terms of their questions that they're asking.
Somebody asking about Manhattan Associates, and I don't know, this thing doesn't thrill me. The pattern maybe is okay. You have this big reversal here on heavy volume. Is this a little handle? It's only a week long. Earnings up 23% in the most recent quarter. Sales up 6%. It's kind of one of those marginal names. I think if I was going to get involved with software, I'd look at Workday. Looks okay. I don't like the fact that you're not getting any upside volume. They announce earnings at the end of the month. I probably would look at buying on pullbacks on this thing. You got this breakout here coming on no volume, and then today, same thing on light volume. It's still early in the day, but it's a little bit perplexing to me that this stock is very volatile, and you have to buy it on weakness. But I would prefer that sort of thing. How do you get into the chat room? Somebody asks. You basically go to. Let me see if I can bring this up. Give me 1 second here, and I'm going to show you where you go. Although I got to say, it's pretty obvious. So, all right, so let me just chuck my browser on over here. If you go to the member homepage, all right, and say welcome and whatever your name is, and you're going to go down here, chat room, launch chat room app using Java or Flash. Either or works. Flash might work better for some of you. Java might work better for some of you. Flash obviously isn't going to work on a device like an iPad or an iPhone, but this is where you get there, okay? And then you have to set up your account after that. If you have any questions, email our support team at support@virtuousselfishinvesting.com. Moving along to the, well, let me go back to Lulu because, you know, again, this is a misapplication of the rules. You're trying to apply a buyable gap up rule to a stock that did not have a buyable gap up. It did, however, have a breakout, so you're breaking out of a base. Looks to me like it wants to go higher. And I noticed, you know, we were talking about Coors rounding the bend here. There have been a number of retailers launching lately. Fossil's another one. Whole Foods Market, another viable gap up there. Carter's, I think, is another stock on the move. That's a retailer. Of course, Green Mountain had a viable gap up yesterday. I thought that was pretty actionable yesterday. It's closing at the peak here, which looks pretty good. I'd watch this for possibly going tight sideways. Gap Stores today is having a big move, a gap up move, and that looks like a viable gap up. Gap's not the most exciting name in the group, but it looks okay, and it looks like it wants to go higher to me, but I think you want to pick the best names in the group, and I guess there are a number of them, you know, so you kind of have to sift through that. Dr. K, do you look at Gap Stores as an exciting viable gap up that you would be interested in?
Well, I mean, these retailers tend to be quite choppy, as you can see. The history of Gap has been choppy. Now the base is completed, so that's good, and we are seeing a good gap up on volume. The earnings and the sales are pretty anemic, but then it's a retailer, so that's excusable, and both are accelerating. So, you know, it's not a bad stock. I think it's probably actionable. I mean, when I saw this, I'm a little bit hesitant because the earnings aren't blowing the doors off anything, and you know, the industry group strength is pretty marginal. And again, the stock tends to be pretty sloppy. It tends to violate the 50-day. So I would be, I'm lukewarm. I mean, I'm debating whether I want to actually put a report on this one. Perhaps
Okay.
a report is good, but with the caveat that, you know, it's a tough stock to play.
Yeah, and we wrote the other day in our pre-market pulse that if you see a viable gap up and you're proficient enough in understanding the characteristics and the parameters of a viable gap up, if you have enough confidence in the story or you think it's actionable, you know, you don't need us to bless it, so you can go ahead and take a shot, because a viable gap up, in my view, is one of the easiest things to buy, particularly if you're able to buy it within a reasonable range of the intraday low of the gap up day. So, for example, this low here is 39.90, stock's at 40.99. You're about 2.5% away from your stop out area, so it's pretty tight in terms of the risk management on this. And if you get something like a Lulu, not a Lulu, a Lumber Liquidators rather, or Lumina, you know, that moves higher, that's pretty rewarding, and you would never really test. For example, on this one, you could have bought somewhere in here, possibly even a few days later, and you still would only be about 3 to 4% away from this. So it's very tight here. So I noticed there was a story in Investors Business Daily a couple, 3 months ago where they wrote that supposedly Investors Business Daily research has determined that gap up moves in leading stocks can often be viable. The only problem is they don't tell you exactly how you buy them. They don't provide any parameters for buying them, and I think they basically stole that from our first book and are trying to pass it off as IBD research, which I think is kind of cheesy. But we have actually, in our books, put out the exact parameters for handling a viable gap up, so you can operate on that basis. I don't think that you need to use a 6 or 7 or 8% stop, the auto stop that IBD advocates in most cases, and that's the beauty of doing it the way we've outlined, because it minimizes your risk in most cases, and that's what makes a viable gap up such a wonderful thing to play, because you can manage the risks very carefully. So let's see, Dr. K, I'm seeing a lot of secondary offerings as stocks move higher. Does this give you pause to a possible top?
Well, secondary offerings, depending on where the stock's at, usually are a sign of expansion. If the secondary appears relatively early in the stock's run, that's a sign of strength. The company wants to raise capital for expansion and R&D and whatnot. So also it's key to look at how the stock behaves after the secondary. But sometimes a stock has such demand that even though the secondary, say the secondary is priced at 50, the stock will start trading that day above that level, and that's a good sign. And of course, the price volume action leading up to the secondary is of paramount importance as well. If you
Right.
get other stocks that are late in the move and they're doing lots of secondaries, that's I don't know, that's not so bullish. That could be somewhat of a warning sign. And we've seen that also with some of these stocks where they just don't get off the ground because they're when the stock breaks out, then the management issues a secondary, like Course, for instance. And I think that's happened. You've done that 3 times now, or 4? Yeah, 3 times.
Yeah, and somebody jokes here. I have an IM coming in. Somebody's joking that if it breaks out again, they'll do another secondary. And that is why, my friends, that you need to start looking at buying these stocks as a rounding out basis. I did want to mention, in that vein, I wanted to mention I'm interested in Silica, U.S. Silica Holdings. This had a sharp move, and then they announced a secondary and it knocked the stock down. I noticed it's starting to round out a base here. You had a big spike here. We talked about this last week, but it's just kind of hanging out underneath the 50-day and along the 10-day, which is now below the 50-day. But I'd watch this one too, because if you check the numbers on this, I noticed that despite the fact that earnings were 0% growth in the most recent quarter that was announced last week, and the stock initially sold off and got support, which creates this big giant bottom in the the big spike off the lows here in the stock. I noticed that you're going to re-accelerate. I think it goes 11, 25, 33, 40%, something like that over the next 4 quarters. And I don't think that fracking and the use of their product, the sand that's used in the fracking process, is just going to disappear and fall off the face of the earth. I think there's a lot still going on. In the chat room, a number of people were reporting that in their regions of the country, they're noticing a lot of activity. I think in areas like Texas, I think even Illinois, someone was mentioning there's some of that going on. I know in California they've been talking about it, and they're going to need that revenue, I think, to fund this ridiculous bullet train thing that they think they're going to start. But I noticed the stock's kind of hanging out, not much volume yet, but I'd just keep an eye on this. I think it's just rounding out, and there's potential, I think, to turn back to the upside. You might watch for some sort of activity along the 50-day moving average, or you could take an initial position down here if you think my word is gospel, and based on the fact that you have seen a number of these work. For example, NSM, coming up around, and I talked about this I think last week or the week before, you guys. I think you remember this. You can go back and look at the archive videos just to confirm this, but I was talking about watch this thing come around the bend, and sure enough, you get a couple of pocket pivots. I think this is one here. It's the highest. It's higher than any down volume in the pattern over the prior 10 days, but it gets a little bit of a spin out, so it becomes difficult to play on that basis. But once you get the Bible gap up, it's moving higher now, and it's acting pretty well, even though it is coming straight up off the bottom of its base. But hasn't that been typical for this market? And this move drags up OCN, which is coming up off the bottom of its base. HLSS is hanging in there and just coming up back to the top of its base here. It's going sideways, a little bit erratic, but trying to hang in there. But that's just been the way this market has operated, and I think you have to look at that sort of thing. So somebody asked about LGF, FBHS short stroke on a weekly pattern. I don't see a short stroke here. A short stroke is supposedly a long upside bar, which this really isn't. But if you go back and look at patterns that are supposedly short strokes, what they really are viable gap ups. And so you don't need to worry about labeling it a short stroke. I think the short stroke is kind of a lame pattern, and it doesn't really mean anything as far as I'm concerned, because in most cases, let's just, IBD was telling you that, see, here's a big move up like that this is a short stroke. And I guess it is, but we don't worry about that kind of stuff, because to us it's a viable gap up. And that's what it looks like on the daily chart. So when they're telling you something's a short stroke, what it really is just a viable gap up, and we can handle it on that basis. But all that's to say that LGF, I don't see that as a short stroke. There's no big, huge move on the bars. It's very typical here. So don't get hung up on these silly little labels, because there are more concrete ways to operate than just labeling some action and then buying into it. And the primary example here is that you had a pocket pivot here, you had a pocket pivot breakout there from a tight flag formation 3 weeks ago. Those are where you buy. You don't worry about, is this a short stroke or a long stroke or a double stroke or whatever the hell it is. You can operate on the basis of more concrete buy signals, and that's what we advocate, and that's basically our methods. We don't this whole business of having to label charts this or that, to us is inexact, and it might be just kind of lame. So you don't need to go there. Dr. K might not be so harsh on that, but that's how I feel about it. ResMed, here you had a gap up 3 days ago, and that's gone higher. So if you had bought into that, and again, this is an example where if you feel comfortable with the story and you think there's something here, you don't need to wait for us to bless it. You can go ahead and take a position. And if you had bought it on the first day, it closed at 49.83. The low of the day was 48.81. So you're about 2% away from this stop out point. So very easy to handle if you want to come in and buy it, And I would say in most cases, don't sit around waiting for us to bless something if you feel strongly on it. But if you don't feel comfortable and you're looking for something where maybe we've evaluated it and believe that it's actionable, then just wait for us to come out with something in terms of a report, so on a particular stock. So EXH is another one someone's asking about. Xterran Holdings. I don't really know this name. It's straight up off the bottom, so you can't buy it. And I don't really see any buy signals in the stock anywhere along here. Maybe this could be considered a pocket pivot, but it's coming off a V-shaped move. So very, very hard to play, I think. And let's take a look at. I want to take a look at fundamentals. It's an oil and gas stock, so we've seen some strength. I was talking about these. I think was it CVI or CVRR might have been one of them. Yeah, that's the refiner. These are all coming up. I think CVI is another energy stock related to fracking, and it's been coming up. And maybe it tries to build a handle in here. But I noticed some of these names look pretty good. Bonanza Creek Energy came out with earnings last night, and I think they missed by a couple of pennies. But notice how the stock is trying to find support on the pullback, so it's opening or moving up off the opening lows here after it gapped down in the morning, and it's getting some support. I still think that this whole fracking thing is viable as a theme, and I think that it is going to continue to be viable. And the stocks, for the most part, that have been moving on that whole, the hype or whatever around that theme are still building bases. And again, that's why I come back to this one, which I think is one of the primary names, and I keep an eye on that one. Let's see, moving down the list here, AMCX. This is AMC Networks. I don't know if that qualifies as a viable gap up. I don't think it's enough of a gap up, but it comes in pretty nicely after running up, so it's a little bit lame there. Kind of reminds me of CVLT. So, but I don't really know what to say about this one. I believe this is Media, Radio, TV. I think the one I like probably better is Sinclair Broadcasting. But these stocks, this one has had a pretty big move. You can see it's coming in just a little bit, but it's holding above the 10-day moving average. So kind of the same story here with the AMCX. I guess you would call this a breakout, from a short little pattern here, but it doesn't really seem to be holding up that well. So I don't know what to say really. I don't think it's something I would be interested in buying. FleetCor is it had the gap up here, and it's now 5 days, and it's rolling around. Maybe a little too obvious. The stock's had a pretty nice run, so maybe a little bit too obvious, and not something that you necessarily have to buy here. But it's still holding above the low of that gap up day, so there's really no issue there as far as I'm concerned. Maybe it comes back and tests the 10-day, and maybe you get a pocket pivot off of there. But still hasn't violated the viable gap up, so cannot be really considered to be in trouble. So that's really, it's pretty much objective. CONN, I noticed this one breaking out yesterday, and it's coming out of this range. You've got a little 1, 2, 3, 4 week base, and so you're getting a breakout here. You might consider that viable. It's definitely relatively tight. The low today is 44.93, so within about, I'm going to say 4%, 4 or 5% of that, and within range of the breakout if you wanted to come after the stock. It's a thin stock, so it's not one that I've ever played. Somebody wants to know if AMWD
just wanted to mention it had a pocket pivot on May 2nd, and relative to the context of the chart, even though it didn't close at the 10-day, it's still a viable pocket pivot. And not only that, the earnings have been moving forward very strongly, and the industry group on the stock is ranked 3rd. So it's got a lot going for it, and so that pocket pivot on the 3rd was an actionable one. However, and that was also followed by the earnings report, which was a viable gap up on April 3rd. But keep in mind that it's been a really tough market, so we want to basically be looking at stocks that are going to have all the ducks in a row, and a lot of these stocks don't. So a lot of times we will just we'll neglect the stock, or we won't mention it because to us it's not an actionable name. But for those people, they're running screens, and you're going to see some of these names we don't mention. But like Gil says, you don't need our blessing on some of these.
Right. If you understand the parameters and the risk management rules for dealing with the trade, then just do it. AMWD is someone is saying, is this considered a V-type formation? On the base, a little bit, but it's not that bad, really. You have a break here. It's more straight up, straight down sort of action. And I think I was just pointing out, let's see, I'm trying to pick out a couple here. This is somewhat, you see this straight up move here. I would say AMWD was a little bit slower on the uptrend, so a little steadier. So in other words, it's taking some time to work out weak hands and bring in strong hands. When something runs straight up, then it's susceptible to pullbacks, and so like in a situation like that, it may need, it doesn't mean that it's bad here, but it may need some time to go sideways and produce another buy signal. So that's something to keep an eye on, I believe. So anyways, UBNT, is that UBNet? That's a big gap up move. The one thing going on here is that you see the pattern on the weekly. There's a lot of overhead. It's really been a doggy stock, and it's gapping up here. So we haven't mentioned it because it really doesn't catch our fancy. But they're also negative earnings growth, negative 20%, and they're in telecom infrastructure, which I think, what is this? RF spectrum service providers. They make management tools, I guess, farm antennas, radios, whatnot. It doesn't really have the earnings growth.
Feeder.
Yeah, it's a bottom feeder. But if you think there's something here, you understand the story. Well, again, here's a gap up move. The low of the day is 1878. You're pretty close to it right now. If you think it's viable yourself and you understand the story, you could act on it, as I said, and take a shot. Let's see, Medco is this is Medicine's company, isn't it? Yeah. It broke out, so you broke out of this pattern, and I'd say the peak of the pattern is 34.92. You're 36.68. You're more than 5% past the breakout point, so the only way you could buy this would be on a pullback. But it looks okay. I don't see anything wrong with it. It's not. I wouldn't say it's a gap up. Today's not a. I wouldn't call this a viable gap. I don't think the move is big enough. A viable gap up is easy to identify. It's not. You don't really have to question whether something's a gap up. When it's a gap up and it's a viable gap, it's a big gap up. It's a big move. That's a big move. This is a big move. There's no question about it in my mind. And when they're kind of marginal. Like this, like you see these little mini gaps, and maybe this is a mini gap here. Here's another mini gap because you closed yesterday at 35.76. You open up this morning at 36.15. Maybe that's enough. I don't know. You'd have to check the ATR, but it doesn't. Today it doesn't really strike me as a viable gap up. So it's just a breakout, and on that basis, I guess that would be viable if you like the story. So. What is your opinion of AVG? I think this is a very interesting little story. Someone in the chat room yesterday was talking about it, and the company is buying back some stock, and you do have this pocket pivot move off of the 10-day moving average yesterday. it's a thin stock, trades 543, say 544,000 shares a day. It does hit my radar screen. The earnings are not too bad. 71% most recent quarter, 52% last quarter, 115% the quarter before, and they're running mid 20% sales growth. So it's not really too bad there. It actually looks decent, but it's a little thin, volatile stock. So I think you might look for it on weakness if you like the story. Somebody asked, do you ever buy BGUs at the open, or do you usually wait first hour for range to be established? It kind of depends. I may do either or, depending on what I feel about the stock. I think in a case like let's just go back to Yelp, for example, the other day. That one gapped up, and it just kind of hovered there. And on the intraday, it just was kind of sitting there. It wasn't any real trading on. So that looked viable, and it was great for a one-day wonder trade. It's now taken 6 days to do anything, and as far as I'm concerned, it's just saying yelp me, I'm melting, kind of like the witch in The Wizard of Oz, because it's just kind of melting downward and doesn't really seem to get any upside volume. But it depends. Yesterday on Tesla, I watched it open up, swing around, and then as it pulled back and retested the lows here intraday, once it had established this low, I thought it was viable there. So it depends. You kind of have to feel your way around it, and it's a matter of you deal with a lot of these viable gap ups, and you get a sense of how they can be handled. There is no magic way, just magically figure out where and when to buy them. There's a little bit of risk in determining where they are within the first day. But the beauty on some of these is if they do this, and they gap up and then they hang out for 2 or 3 days, they get real tight, the volume dries up, you can figure that you can get in there and buy the stock. And in this case, that works. And I think that's one way to do it if you're worried about where the thing is going to put the low in. But a lot of times, if it closes a lot higher than the low of the day, you might have an issue getting in, or your risk is much higher than it would be if you're able to buy near the close. But there's no rule of thumb on it. So, speaking of rules of thumb, on a viable gap up, should the porosity on a stop be a function of the stock's volatility? Do you have a rule of thumb, Dr. K?
Okay, say that one more time.
On a viable gap up, should the porosity on the stop be a function of the stock's volatility? Do you have a rule of thumb?
Well, it basically when you have a volatile name and it gaps up, the gap up should reset the prior pattern. Now that's of course in theory. Now it's not always the case. So if you use kind of a rough guide that the stock's been volatile, it has a viable gap up, you give it a little bit more porosity simply because it's volatile in prior to the gap up. Otherwise, you're more likely to get whipped out of the position prematurely. And of course, knowing that, you're going to have to give the stock a little bit more downside. So it might not be within a person's risk tolerance levels to buy into that kind of name that's showing a lot of volatile action.
Right. Let's see here. What's the difference between O'Neill volume to the regular volume? Well, you guys get hung up on a label, and it just so happens that when I created this chart thing, somebody actually created the 50-day moving average of volume for me on this, and they just named the little app that does this, or the little program that they wrote that does this, O'Neill volume. So that's basically what it does. It's just a 50-day moving average. So again, somebody sees a label and they think there's something magic there. It's just volume MA 50. That's what it is. That's what this was labeled when it was created by somebody for me, because I was wanting a 50-day moving average of volume like you see on O'Neill charts on, say, Wanda and MarketSmith. And so the person who wrote it just labeled it that. So nothing magic there. Let's see here. Well, moving down, I think I've run through all the questions. I'm going to go through some more names that I'm looking at here. And I noticed Stratasys, along with the rest of the 3D printers, is acting pretty well. Proto Labs, which is just a pain in the butt to try and hold. It's just very volatile, but you can see it's acting pretty well here. 3D is trying to hold up, and it's acting pretty well today, despite the market kind of swishing around here. X1 has moved higher. I think there was a pocket pivot just above the 10-day moving average right there, but this is a tough stock to buy into. It's relatively thin, and it swings around a huge amount. So I think you got to be careful with something like this. But I noticed the whole group is starting to act better, and with stocks like SSYS moving around, coming around the horn, SSYS there, okay, and 3D, I think those look pretty interesting. Somebody asked about SPGI. We already talked about that. Very tight, and you had this. I would consider this a pocket pivot type move, because this huge volume spike was due to a secondary being priced. So,
yeah. So that would be yeah. Yesterday's action would be the pocket pivot off that tight formation.
Yeah, and I think when you see it happen, you can see it happen. I mean, it's pretty much there, and it's also very tight formation. So, Angie is an example, I think, of a Bible gap up that is going nowhere after 2 weeks or so after the fact, and I think on that basis, it needs to be looked at with suspicion. So, I also think that it's a cheap, sort of a cheap stock. It's kind of relatively cheap, I think. And negative earnings, that's really my point. I mean, these guys are growing sales at 68%, $52.2 million in sales in the most recent quarter, and they still can't make money. But it's kind of hanging out, so it may morph into being a viable gap up. It may morph into something else, say a flag formation, maybe a pocket pivot shows up along the 10-day moving average. That's a possibility. Cree, I hate the stock. I was looking for a pullback to the 50-day, maybe lay into that. Instead, it kind of flutters back up on relatively light volume, and it's continued to do so. But I think the long-term story here is pretty good, and I'd like that. So at this point, I'm just looking for a re-entry point, but it acts pretty well. Onyx Pharmaceuticals, basically, you had a breakout from this funky base, but you found support at the 50-day moving average. On the weekly, you can see that volume is higher this week, not hugely higher, but still higher. And the stock bounced off of the 50-day moving average. So somebody asked, does today's secondary in Santoris invalidate the pocket pivot? No, it doesn't. If it absorbs the secondary and moves higher, I think it can work. Somebody asked, have you ever considered or fooled around with playing pocket pivots on a different time frame? No, the daily chart's sufficient. Dr. K, you haven't found anything different in that regard, have you?
No, I haven't.
No, I mean, there's only, you don't need to fool. If you want to fool with stuff, I guess you can and study it if you come up with some good rules. Alchemies, I like this name. I like this gap up. I think it acted well. It moved back in. Earnings are coming out, I think, in the next week or so, and you're trying to come back above the 10-day moving average. I don't know if this is going to turn into a pocket pivot, but I definitely keep an eye on it. I think it acts okay. A couple of comments I think are interesting. VOSI buy points also tend to offer a somewhat earlier entry, which has been helpful in this market. I think, like I was saying, you need to look at these pocket pivots on stocks rounding out bases. I think that has been helpful. Someone else points out, well, actually the same person points out that many IBD buy points are the same as VOSI buy points, just with a different name. Well, IBD doesn't use pocket pivots, and they don't really talk about viable gap ups in any specific way. But my point is that the short stroke is nothing more than, in most cases, than a viable gap up. That's the stock. On a weekly chart, when you have a viable gap up like Tesla, you don't see the gap up on the weekly chart. It just looks like a long bar. And I can tell you for a fact that I know that the first example, well, of a short stroke was back in, I believe it was 2003, and I'm going to go all the way back to it. And it was in Research in Motion, now called BlackBerry. But I believe this was, I think it was 2003 or 2004. And this is the pattern here, okay? And this is a real tight formation. Stock came out with earnings and launched, and then it held very tight. Volume dried up the second week. But if you go back and look at this, let's go back there. It's going to take me just a few minutes to get, well, not a few minutes, maybe a minute here. Give me a sec. And if we go back and look at that, when it happened, let's see, that was 12/22/03. Here's a faster way to do this. And let's see, and here is the gap up move. So right there. So basically you had a Bible gap up here. If you had bought near the opening, you could have bought it right there on the basis of a Bible gap up. So if you're buying it on the basis of it being a short stroke, then you're buying up here. If you're buying it on the basis of a Bible gap up, once you can identify the low of the day here, let's make that a little bigger, you'd be in a lot earlier. So I think understanding Bible gap ups is a lot more profitable and actionable than somebody giving it the label of a short stroke. And you can see you went sideways 1, 2, 3, 4, 5, 6 days and then took off. But you know, on the basis of this being a Bible gap up, you could have gotten in closer to 10. This is all split adjusted. The stock was a lot higher back then, rather than buying it 10% higher on the basis of somebody labeling it a short stroke. So again, you know, to us, this labeling stuff is it's imprecise, and I know that having spoken at IBD webinars way back when I was there, people have a lot of questions because there are a lot of things that are imprecise, and I think that's the thing that we try to do here is based on our experience, just come up with things that are more concrete, you know, such as a 7-week rule on how do you handle stocks, where do you sell, you know, where can you cut your position back, and where can you buy it back, you know, using pocket pivots if a stock does issue a sell signal and then turns around. And so that's kind of what Dr. K was able to come up with, and all of that is really born from our experience working there and with the imprecision of a lot of the rules. I mean, a breakout that occurs on huge volume and is within 5% of the top of the base, you know, that's a very simple buy point, and that's pretty easy. But there are a lot of other more subtle ways to approach it, and that's really what we've tried to do.
People should keep in mind, I mean, you can go to our website FAQs, you can also read our books, but you'll know that pocket pivots, the strength in pocket pivots is that they occur before the base breakout. They occur before IBD says to buy the stock. They occur within the base. O'Neill is adamantly against buying in the base. I used to have this discussion with him. He's still very much against it. Nevertheless, pocket pivots within the basing pattern tend to work on balance. Statistically, they're very significant. The other thing is if you miss a base breakout and the stock's rushed forward 20, 30%, pocket pivots allow you to buy after the breakout with very low risk. So they allow you to pyramid also a position and establish a sizable position in a stock that's going to keep moving higher. So, I mean, in terms of IBD, I just see IBD as being pretty traditional in terms of alerting readers to traditional base breakouts when they do occur. And once they move, then, you know, IBD is not going to keep saying to buy the stock. And likewise, when the stock's in a basing pattern, IBD is not going to say to buy the stock. It's going to wait for the base breakout.
Right. And that's not to say, you know, IBD isn't a useful tool. I subscribe to it, and I think everybody should, because it can be a decent idea generator as well. I think at the end of the day, when it comes out in electronic form, for me it's a great review of what went on during the day, and occasionally I might find something that I missed during the day, so it's very useful that way. But, you know, all we're doing is we built on that work, and we came up with our own stuff. And it's original stuff, and it works, and that's all we have to say. And you know, if you want to abide by less precise rules, and that's, you know, your call. If you just want to buy breakouts when they're obvious to the whole world, then that's your call as well. So, but as I've said, I think one of the greatest buy points is the Bible gap up, the easiest one to deal with. Okay, short side of the market, LinkedIn. This is how I look at this, and we've been talking about this on the chat room, and you basically have this huge gap down on huge volume off the peak. In Dr. K's view, and I'm gonna start with what Dr. K's studies have shown on these sorts of moves, and I think it's relevant to the whole idea of shorting failed bases, which I think is a very key approach to shorting, because you can get a very sharp move off the peak and as it breaks down through the 50-day moving average. So anyways, you're just hearing my phone going off. But what you have here, Dr. K, and you can confirm this, when you have this kind of move and huge volume, that's generally a sign you just want to clear out of the stock. And if you have a profit, you take your profit. Right, Dr. K?
Yeah, clearly. That kind of gap down, just move out at the open, sell it, no questions asked.
Yeah, and so on that basis now, I think the stock's under distribution. A lot of institutions moved into the stock. I looked at their earnings report. I noticed, you know, there was the growth in the I think it was the what is the one? There's a recruiting service or something for companies that they do. I'm trying to remember what it's called. And that, the revenue on that has really slowed down. And management guided lower for this year, and I think what they're doing is telling you what they're seeing. The velocity of the growth of LinkedIn has slowed down, and it doesn't really. If you have a page, I have a page on LinkedIn, and you can connect with other professionals in your field or related fields, or even completely unrelated fields. But I notice people don't really use it as a place to hang out and go back and forth on like they do Facebook, and so it doesn't have that aspect. So the other part of the business that works is where companies pay them to use the service to recruit new employees, and it's not like there are a lot of companies hiring right now, so that necessarily isn't a huge source of revenue, I think. But it's all slowing down. So you got a stock trading at what, 130 times forward estimates. At one time it was much higher. In fact, let me take a look at this and just so I can come up with a range of numbers here. At the peak, the high was 438 times earnings at one time. Right now, you're 122 times forward estimates. It's slowing down, and I think what you have here is a late-stage failed base. You have failed on this breakout here, and what you're doing now is you're forming an inverted flag. And I am short the stock right now. I've been shorting it each of these days on these rallies back up here, and those of you who've been on the chat room know that, and I think a few of you have been doing it along with me. And the idea here is that we don't think it should get above, say, this high of 3 days ago. It was at 181, 182, say, roughly about 4% higher, I think, from here. Well, it's a little more now, but you see it bumping into the 50-day line here several times. And this, to me, this is an inverted flag. And what I would look for now, and this is typical of how late-stage base failures will work, they'll break down very rapidly. They'll break through the 50-day. They might hover around for a few days, and then they'll break down again. And I'm thinking maybe you undercut this low over here, which is 165. The 200-day is way down there, so I'm not sure I'm convinced that you're going to get all the way down there. I think eventually you will. And I think that you may be looking possibly at support at the top of this area here, which again coincides with an undercut of this low. So I think you could come down there and then bounce, and then this would set up the longer-term move where you're going sideways for a little bit. And now let's just kind of draw this out. Let's see, where are my handy-dandy pens here? Here we go. So let's just say you broke down. No, I don't want to do that. Remove that. I want line segments. Here we go. Is this going to work? No, that doesn't work either. I need to learn how to use my tools. Maybe this is it. Yeah, here we go. So let's say you break down to this low like that, okay, and you bounce off here, and now you run, and the 50-day starts to come around. Here's a 50-day, and it starts to come around like this. Maybe it turns down, and you have these rallies and breaks and rallies and breaks in here, and eventually, what are you doing when you're seeing this sort of action now? Now you're setting up a left shoulder here, a head here, where the right side of the head, this would be a pinhead, okay? And the right side of the head is defined by this massive break off the peak, and then you get these moves back and forth. Now this turns into, it morphs from a late-stage failed base or a failed base formation back to head and shoulders. And so this is how you can sort of kind of figure out how this might form out, how it might develop, and then try to operate on that basis. But the first thing I would look for, and this is your first shot, it's really a tactical sort of move in terms of just playing a short-term break and take some points out of it. So my approach on the short side is like Jesse Livermore's, where I'm trying to take points out. I'm not necessarily looking for percentages. Although once you get a head and shoulders, and let's say you get a breakdown through a neckline, boom, that might take you down to the 200-day, which might start to roll over and be closer to below 130. And so these are scenarios as I'm looking at them on this as this develops, and that could be exactly what happens over time. So so I think the stock initially under 165, I'm probably going to be covering if I'm still short the name. yesterday I had a position and then I covered it because I wanted to use all my capital to play Tesla on the day, and because I like to go hog wild on these things when I see something I like. But again, it gave you another shot by rallying up into the 50-day today to short it again at the 50-day moving average. So I'm going to take away all. Is there a way to remove all these lines at once? I don't know. I guess I got to do a little at a time. I'll do that later. In any case, that's what I'm looking at on LinkedIn. So let's see how fast I can get rid of these turkeys.
Can't you just bring up a new page?
Let's see. No, it keeps the lines on there, so they live there forever until you rip
You'd
them
have to
all
bring
out.
up a totally new, a new page, like a new.
No, watch what happens. Okay. So, oh wait, nope. See, they're still there.
Huh. Well,
They save the lines for you because they assume that once you start drawing lines, you want them to be there for all posterity to see.
Right.
So,
No, but if you brought in a totally new window, it's just going to you'd have
oh,
to
if
go.
I use it, yeah, if I set up a new window, it wouldn't have those on there. You're right. Yeah.
Right, and that have the same parameters. Like I usually use.
Let's go soda chart, crazy stock.
Yeah, that's a nutty one.
The same thing yesterday. It could be bought, on the breakdown after earnings, bounce out to 50-day, now it's breaking out of this base. This is another stock, though, that has pretty large short interest. As of April 30th, looks like they updated names. You had 8.7 days of short interest, which is, Dr. K, I need a quick calc from you. 8.7 times 765,000 is what?
8.7 times what?
765,000. What is that?
6.65 million.
Okay, so you got 6.65 million shares sold short on a float of 17 million. And I think it's a big short squeezer, and I think when the shorts find out that it's not breaking the 50-day, they got to scramble. So, very tough name to play, and I think on this one you would have to be opportunistic in buying pullbacks, and I think Proto Labs is another one that seems to operate that way. But you can see how the way this market works is like buying strength doesn't help you out. You have to be looking at turns, and this is where I think pocket pivots come into play. I thought, this move right here, even though the stock closed down, you can see the heavy volume. That was the day that they announced earnings, but notice how it did have a huge volume spike, and it closed above the 10-day and the 50-day. And in this market environment, I'm actually not necessarily afraid of trying to buy into those. And in hindsight, I should have, and I saw this happening. And in this market, I think you kind of have to employ some of that approach. So. Dr. K is my human calculator, so Dr. K Math Whiz, indeed. And so I just use him as my human calculator. He's very useful that way.
Gee, thanks. I feel very, very utilitarian.
Yes, unfortunately, we need to create a Dr. K app. That's what we need. Anyways, that would be most useful. But somebody has a question for you. I think we'll close up with this. Since we have gone over an hour. Dr. K, is the MDM showing any weakness, or is it stronger than last week? I saw it working out the other day and was actually lifting 400 pounds on a bench press, so I think it's getting stronger, isn't it?
Yeah, what doesn't kill you does make you stronger. And 2012 certainly was one of those years. I think for virtually every timing system I saw, and we saw what 2012 did to the trend-following wizards, who were largely down double digits for that year. So, as far as the MDM is concerned, it adjusts. I think that that's simply the reason why it was able to do well in 2009, 2010, 2011, when many systems did not do well, and then 2012 threw it for a loop, and it's adjusted to that. So basically, there's a little bit more, like I've said, there's a little bit more downside risk, but then that's worth taking to prevent the number of false signals that were occurring in 2012. Should the market go back into that kind of a pattern that we saw in 2012? Right now, it looks like the market's trying to reaccelerate to the upside. That, in other words, that QE3 is finally taking hold, but we'll see. It seems like any kind of negative news it results in a quick sell-off and then a stabilization of the markets, which then start to move higher. And we did cite that statistic that I believe that in the last 17 years, this is the longest the stock, that the major indices have moved without having any sort of substantial correction of, I think, it was 6% or greater. So yeah, we're living in nice QE times.
Yeah, and on the chat room we were talking about this, 3 shakes and a parabola. So you go 1 shake, 2 shakes, 3 shakes, and now here you go on a parabolic move to the upside. I think a lot of this might be like Japan's market, and if you think about it, there's so much liquidity out there. It's possible it could drive sort of a bubble move in the indexes, and I think to play it, you got to be ready to move in ways that maybe aren't as orthodox as they have been in the past. So, I think that's really what you're looking at. Now, look at Toyota Motors. This kind of gives you an idea what QE in Japan has produced. Toyota Motors has been moving higher. Honda Motors, kind of a laggard, but Toyota being the biggest. Aren't they the biggest car company in the world now, Dr. K?
Well, let's see. I think they would be because they're over 200 billion, and I believe that was the statistic that they've overtaken everything. So yeah, $207 billion market cap.
But just to kind of underscore how difficult this market has been, if you look at this up until May, the utilities index was actually the strongest mover, the strongest performing index among all the major indexes, the Dow Jones Utility Index, which I think is fascinating. But notice now how it started to break down as the market is moving higher. And I think what this might be telling you is that we're now shifting away from this environment where they're favoring bigger cap dividend paying stocks. And now we're going to see things move into more traditional growth names that we're used to playing. And I hope so, because that means if that's the case, there should be some opportunities to play. Obviously, Tesla's been a great one recently, and I think that there are going to be more. I want to finish off. Somebody's asking about Alexion, and I should talk about this, I think. This stock is breaking out. There was a time when I thought it was a short, and in fact, it was setting up to look like a head and shoulders, as you can see here. But now it's trying to create this big, ugly pattern and trying to come up. And so, I don't know if it's viable here. It's a little erratic in here, but it is coming up. It's definitely not a short. I don't know if I'd go long. I think there are other things to go long. And as far as shorts go, I'm looking at LinkedIn is maybe one that counter trends the market, just like Apple did at the beginning of the year. So, but Apple's now found this low, and you had these 1, 2, 3 waves to the downside, and I think that maybe puts the kibosh on any further downside for now, and we'll see how it consolidates. But it could eventually get to the 200-day moving average. Not that I'd play it, but I think that that's played out for now. But it was weak earlier in the year when it broke down from its 50-day moving average. And oh, look at that! Just when I said that, the briefing.com lady has something on LNKD and some news on them. Let's see, what are they saying? LinkedIn slips to new session low of 174.32. So, that's the briefing indicator. Usually by the time they've figured out something's going down, that's the low of the day. But anyways, what do I like today? I like the 3D. I think you had to be on it this morning. That's why we put it out on our pre-market pulse as a potential buying opportunity, given the fact that the 10-day moving average was relatively nearby, and you could have used that as a selling guide, or even the low of this day, because you might get an undercut there. But to me, it looks like it wants to go higher, and I think all these stocks want to go higher. Anyways, that's all we've got. Somebody says the illustration on LinkedIn was great. More examples would be great. Well, I can only bring up examples as they present themselves, and right now the only thing I see that kind of fits the bill there is LinkedIn on the short side. So, like I said, maybe that counter trends the market if it continues higher. Anyways, that's all we've got for today, you guys. Hope it was worthwhile, as always, and we'll catch you next week. Good luck.
So long, everyone.
The organizer has